Hello everyone, Akash here. It has been constantly proven that the best way to average person to build wealth over the long term by investing in stock. If you look at so far, stock deliver better return than bonds, saving yields, and gold over the past 4 decades. If you look at every 10 years period in the past century, stock have outperformed most investment. If you look at yourself as a stockholder, basically it is kind of like having your own business. As that business get bigger and more profitable and US economy and global economy grows, your business become more valuable. This is 2021 right now. If you just look at last 12 years, we have been through 2 brutal recessions. And if you look at S&P 500 and the market as a whole, has delivered better return than bond and gold. This is why stock make up the foundation for most people's portfolio. But you have to keep in mind, it varies one person to other how much stocks make sense to you. Like example, if you are in your 30s saving for retirement, you can ride out many decades of market volatility. In that case, you could almost entirely own stock. But if you are in your 60s or 70s, you are most likely gonna make it into your 80s or 90s. In that case, you should protect your asset that you are going to need it next 5 to 10 years by investing on bond and holding cash. There are 2 risks in stock that you have to keep in mind: volatility and permanent loss. Stock price can swing broadly over a very short period of time. This does create risk if you need to sell your stock in a short period of time. Also, you have to worry about permanent losses. Like I said before, stock owner are a business owner, and as you know, sometimes business fail. If a company goes bankrupt, in that case, contractor, bond owner, vendors, and suppliers stand to get repaid first. After that, if anything left over, stockholder gets it. If nothing left over, that would be permanent losses for stockholders. You could limit your risk by understanding what your financial goals are. Let's go through how could you manage volatility. If you have a kid going off to college in a year or 2, or if you're thinking about retirement in few years, in that situation, your goal should be no longer maximize growth. Instead, it should be protecting your capital. It will be better to shift the money you will need in a few years out of stock and into bonds and cash. But if your goals are many years away in the future, then you can hedge against volatility by doing nothing, like I said before. So let's go through how can you avoid permanent losses. The best way you could avoid permanent losses is to own a diversified portfolio. Basically, don't put too much of your wealth concentrated on one company or one industry. By diversifying will limit your losses to few bad stock you picked, and meanwhile your good stock will make up for more than your losses. Give you example, you invest same amount of wealth buying 20 stock in 20 different companies and one goes bankrupt. Most you can lose is 5% of your capital. On other hand, one of those stock goes up on value by 2000%. In that case, it will make up for not just one stock that you lost, but it will double the value of your entire portfolio. So diversification can protect you from permanent losses and give you exposure to wealth building stock. Hope this video was helpful to you. Many good videos you'll find in my channel. Consider subscribe to my channel. Take care.